Welcome back to Studio 701.
If you've got your eye on a home improvement project, you may have more options than you realize.
Brianna Fleck and Leanne Westgard with Bravera Bank. They're mortgage lenders there. They're joining us today. Thanks for being here.
Thanks for having us.
Yeah. Thanks for being here, ladies, on this Groundhog Day. So we like focusing on ways to improve our homes, as we just watched with Carpet World, but not everyone knows about some of the loans that may be possible for a bigger project that you're dreaming about. So what can you tell us, first of all, about construction loans?
Yeah, so really kind of like how to get started with a construction loan is you're going to start by either purchasing your lot or having your lot in mind. And then from there, you're going to want to talk to a builder and see if the builder would carry the financing for you. And if they don't, then you're going to want to talk to a bank. And then from there, you're going to want to get pre-qualified. We're going to tell you how much you can afford. And then after that, once we pre-qualify you, we will order the appraisal for you. You don't want to start any work on the house until the appraisal is ordered. Kind of with the appraisal, we will include the lot with it. Mm-hmm. So 100,000. So let's say your lot's worth 100,000. Your home is to build the home is going to be 400,000. We're going to want that appraisal to come back at 500,000 to include both of those values.
Yeah, and a thing to keep in mind is when we are approving you for that construction loan, it's a 12-month loan. You are paying interest-only payments. But we've also approved you during that time for the permanent financing. So once construction is done after 12 months, you will already be set for permanent financing. That's construction loan. You will pay it as the bills come into your builder. So whether you're doing the general contracting or you have your builder doing it, whoever submits the bill to us will get the borrower's okay on paying it, and then within a day or two, those funds are made available to your builder to pay off or to purchase more of the equipment, whatever they need for building the home.
Yep. Sure. So how much money does someone need to bring to the table? Do they buy the lot? Is there a down payment? I'm sure people watching at home are probably wondering, like, okay, how does, I know you said disperse, but like how much skin do I have in the game as a consumer?
Yep. Typically, we find that if you are carrying the construction loan or if you're coming to us for a construction loan, you already own your lot. So that lot is considered your down payment, your equity in that loan. So typically we ask for 20% down. Okay. And that 20% is the lot plus the cost to construct. A lot of times that lot is already taking care of that 20%, so you don't have to have any cash to put into the project.
So long as you own the lot.
Yep.
Right. Okay.
And then if you don't, well, then we'll look back at the 20% down from the appraised value.
Okay.
Yep. And when you're talking about being approved for a loan, you know, how are the funds dispersed? All at once? You know, you get this big chunk of money. How does that work?
We disperse them as the bills come in. So as your builder has to buy roofing material, we provide the funds to the builder either when they give us an invoice or say, no, I have to go buy these supplies, I need the funds in advance. So you're only advancing from that construction loan as you need it. So you're not really paying interest on the whole construction loan. You're only going to pay interest on what you've advanced.
Okay. Yep. And then what if you're someone like maybe Amber or myself where I said, I'm never going to move again because the worst part about moving is actually moving itself. Well, I do love the house, but I hate moving more than I love the house. So, so what about like home improvement loans? Is that something you guys can help people out with?
Absolutely, it's the same process. You can actually use it for a home you already own. You love your house and you just want to make improvements to it. Or you found the perfect house, you want to purchase it, but there's some things that are missing. So we can use it as either you purchasing a home or a home that you already own. Same process really as a construction loan. You come to us after getting some plans and specs from your contractor. And if you're purchasing the home, your first advance from that construction loan, or that we call it a major home improvement loan, will be to purchase the property. And then every advance from that point on is going to be when you have your home improvements done.
Yep. And likewise, the home will be appraised from the plans and specs that we receive from the builder, so the completed home renovation. And then what that comes in as appraised at, that's how much we'll be able to release to you.
Awesome. Well, sounds like a lot of great options you guys have at Bravera, so thanks for joining us today.
Thanks for having us.
Thank you for having us. Yes. All right.
All right, and for more information, visit bravera.bank/mortgage or give Brianna and Leanne a call. Their numbers are right here on your screen. But